Jingle bells, Batman smells, Robin laid an egg. Ba, 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 ba. Well, hello. We're going to have a little look at the 5%ers and answer quite an important question. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. No shock with my jumper, and I've got my bar humbug hat on because I'm not well today. I've got the snivels, so I need me coffee. I've got plenty of coffee.
Yes, it's coffee time. Coffee, 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 coffee. Cappuccino. Java, yes.
And we'll crack on. So what am I doing today? Well, I'm actually going to answer a question on the 5%ers. And why is that? Because I think it's quite an important question to answer. And it's, should you use the low risk or the aggressive? And if you don't know what that is, I'll go through the screens and I'll kind of give you my take on it. Because I guess it's the first question you'll ask. Well, it's the second question you'll ask when you go into 5%ers. But let me fire it across and I'll show you. Now, this morning, I was trading cable. I do it pretty much most mornings for the Scruffy squad. And I do it in real time.
No way.
Now, this particular trade was taken... Oh, dear me, it was very early this morning. I started at 6 o'clock in the morning before I go and have a shower and freshen up sort of thing. And I run through it. And I give a bias for the day. And I kind of explain what I'm looking at. And one of the guys asked a question, which came in through the YouTube rather than on the Discord. I mean, the Discord where we are is here. Have our little chat, and there we go. There's the prop, and there's the video when it was edited, put in there. Okay, and I do this every morning. Normally, I'll get them in pretty sharp. That one was like 10 to 8 in the morning, so they know exactly what's going on. But they do get to see these very early. This is at 6:05 in the morning. They can see the exact direction where it's going, how strong the market is, etc. And they know when they get up, basically what they can trade. All right, so that's a good thing. But Nick, and a little salute to you because it is an excellent question, and I haven't really touched on it before. Is very simple. Do you prefer the low risk or the aggressive? And as I said for myself, I'm definitely low risk. All right, and I'll explain that why. And then the next part of it was, well, there's only a 1.5% drawdown on it on a position. How do you cope with that? Well, that's very easy. That's to do with your position sizing. If you put too big a position on, you're kind of putting your head on the block. You know, the trick with any trading is keep your position size small and then build it up, rather than going in full hog and praying to God you've got it right. You need to give yourself some room to maneuver. So with that said, you come to the 5%ers, and I'll actually show you my platform as well. I said it was the second question because the first question you'll have to ask is, are you going on instant funding or the 100k bootcamp? And I'm saying that assuming you know what the 5%ers are. And if you don't, the 5%ers are a prop fund where they'll supply the money for you to go to market, and then you essentially have a profit split 50-50, which is fair. They put the money up, you do the work, and then you half the profits. Very, very simple. What is the benefit to you? It means you can trade with a bigger fund for minimal capital. And the other side of it is there's lots of free education with the 5%ers, etc., and there's a good support community, and I'm part of that. This year, you saw me started in April, and I took the accounts into 6 figures, and I'm doing it again with a small account, so you can see that one account build up through the next 12 months. And I'll show you it now, and then you'll get a grip of what I'm going to talk about. Bear with me just a second, guys. There we go. This is it. That's my name in the top corner. There's currently 206. Now, it doesn't look massive amounts of money, and it really doesn't. But in the grand scheme against the account, it is massive. Because what you're basing on is your drawdown. If you lose that drawdown, you lose the account. So you have to keep your positions very small, and that's what I was touching on in the comment to Nick there. If your positions are small, you can move about, and you've got positions that you can shut down, re-enter, add to. But if you have a big position on, you've literally got nowhere to go with it. It's kind of a one-hit wonder, if you like. So this is where the low risk comes into play, and I'll show you that in just a second. As you can see, I've got a good equity curve, 111 trades, 93% hit rate, and a profit factor of 8, well, it's actually 8.6, but as long as it's over 1, it means it's profitable and sustainable. So that is that. So let me go back to the 5%ers, and I'll explain this. The difference between the instant funding and the boot camp is, very quickly, the boot camp is a series of challenges, and then once you pass those challenges within a 12-month period, they'll give you a £100,000 account, or $100,000 rather. Instant funding is exactly what it says it is. You will enter the market live on day 1, and you have to hit your milestones. Well, your first milestone, if you're doing the program I've just shown you, which is this one, is $600. Now, it's a marathon, not a sprint. You have the best part of 6 months to achieve this. So you just do little steps each time. And what that does is it's compounding the wins over and over. And eventually you hit your 600. As soon as you hit your 600, the quadruple the initial funding, which is 10k on this particular account, to 40. And then you have to do 10% of that, and they'll give you 80, 10% of that, 160, and so forth, to over 2 million in funding. And what I'm driving at is it's little and often. So every day, little steps make a big journey. But the question was, should it be low risk or aggressive? Well, to me, it is definitely low risk because your targets are less. You've got more time to do the task. So you've got thick end of 6 months to achieve $600. Whereas if you go on the aggressive, you've only got 60 days to achieve $1,200. So you've really got to be at it all the time. And what that'll do is that could force you to take a trade that you wouldn't normally take a trade, just to try and keep ahead of the game. Whereas the low risk, it's nice and gentle, you can take your time, and you will get to the same level. I'm 10 days in on this particular challenge, and as you've seen, I'm over 200, so I'm over a third of the way in 10 days. Now, in the next 10 days, hopefully I should be more than 50%. Christmas is coming, as you might gather, so that might spill over because I am going to shut down for 2 weeks at the back end of this week and start again in January. But come the end of January, I should be done. So in theory, I've achieved it in roughly the same length of time as the aggressive, but a gentler pace. And if I'm not quite there, I don't have to force a trade. I can just move it along ever so easy. So for me, it is definitely low risk. And if you're interested in trying this, go down in the description. There is a direct link to 5%ers, and you'll get 5% off your buy-in fees. And it's an easy way to go. It's an easy way to market, I guess is what I'm driving at. And that's about it really. So if you are stuck and you're a little bit curious, I've gotten to know this inside out over the course of this year, and as many of you know, I trade for a living anyway. I'm happy to answer your questions, so fire your comments. By all means, contact me. You'll find all my contact details below. And if you want to see exactly how I do trade, visit the Scruffy Squad, because in there you see everything. On YouTube it's just a snapshot, and that's about it. So as always guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.